Well guys, welcome back to the Frugal Power channel. This is Brian. It's been 2 months almost since I last spoke to you guys or uploaded a video. So before I get started, I just want to share with you guys what's happening. In April, there was a huge, I would say massive hailstorm that hit my neighborhood.
So swath of hail ranging from 3/4 of an inch to about 1.5 inches, which
as a result, I needed a new roof because of the hailstorm, and I've been spending a good amount of time outside of work trying to find a good contractor to do the work, including my pool screen. That's number one. The second thing is that I spent the last month and a half going through a refinance process. So I made the decision to do my refi for my property here that I'm living in and also my investment property. And for this video today, I want to share with you guys what my refinance process looks like. And I have 5 takeaways. These are the 5 lessons that I learned and I want to share with you for those who are still trying to catch the tail end of this great time to refinance or buy a property, what you should be considering if you're going through the refinance process. And before I get started, guys, I thank you for all your support, the messages to inquire what's going on, and I am really happy to be back. So again, to the subscribers, thank you. All those that are new to the channel that want to learn more about personal finance and financial freedom, would love it if you guys can give me a thumbs up if you enjoyed the video and subscribe to the channel. Now, let's get started with today's video. What are the 5 things that I've learned and I want to share with you on how you can save money in your refinance process. Before I hop into the 5 things, I want to share with you that the refinance process is fairly elaborate. So I'm gonna break this down into 2 videos. The first video, which I'm doing today, is around just the 5 things that you need to watch out for as you go through the refinance process. And the second video, I'm gonna take you through a closing worksheet so that you know exactly what the numbers look like and at the same time know what the front end and back end charges are. The front end is really what your administration fees are, your application costs, closing costs, and all the recording, documentary fees. That's all going to be in the end with title costs. And I want to just talk about that in a second video. Number 1 is about your credit score. We've done a lot of videos and talked about what's going on, the importance of your credit score for buying. Same thing holds true when you are refinancing. If you have a credit score that's over 740, where you can get some of the best rates possible, I was able to get a very good rate. And I'll share the basic numbers with you. It was 2% for my primary residence, and then it was 3.25% for my investment property. I also want to share with you that through the course of this, if I mention any names or any companies, any websites such as Bankrate, I'm not affiliated or sponsored by them. This is just the method of research that I undertook to find the best rates possible. And then I also work with Revolution Mortgage out in Ohio. At first I was a little leery because they were so low in terms of cost and how they would make their money. But I have to say they were a great bunch of people to work with, and by no means am I also sponsored by them. Now, with that aside, number 2 is around understanding points. When you are getting your rates, and I'm gonna pull up this bank rate and I'm gonna talk you through it. You're gonna see a lot of numbers, you're gonna see a lot of lenders, but you're gonna see different rates, and you're gonna also see what the fees up front looks like, if it's points involved. And I want to make sure that you understand when you're doing a comparison, the best way is to compare apples to apples, oranges to oranges. And that means when you're comparing rates, when people are quoting you rates, make sure you ask them, if it's 0 points, what are your rates? And then just keep the other items such as loan costs and other things as an itemized list. So that way you can compare lender 1 with lender 2, what their rates look like. When you're able to separate all these costs, you are not confused by all the different types of costs. And it's very important that you're able to compare these line items separately to know what is built into the loan, what is not. And that takes me to number 3, understanding what the closing cost looks like. There are certain costs that you will have to pay, which is certain state recording fees. There are certain title costs, but you also want to ask for a estimated closing sheet. If people are reluctant to give you a closing sheet, that means they are trying to hide some numbers or putting costs into the back end. Is, say for instance, you're taking a loan out for $195,000, and the reason I picked this number is they're gonna say, why don't you just make your loan $200,000? In your mind, you're saying, well, it's $5,000, not that much more, it's okay. And they're gonna tell you that. But in essence, that $5,000 is profits to them because they are putting a lot of the costs into your loan. And what they'll tell you is over 30 years, it's only $1 a day. $1 a day over 30 years becomes a lot of money. If you do the math, $1 a day, that's $365 a year. If you multiply that by 30 years and you factor in interest, that's gonna be a couple of $1,000s. What I'm saying is just know that when you're asking for the loan amount, make sure that it is the value that you're asking for. So to summarize, number 3 is do not wrap any of your closing costs into the loan just yet. You'll be able to get a better comparison if you understand exactly how much money you are looking at for closing costs. And make sure that you have the detailed breakdown, and if you don't understand anything, ask. And number 4, if you're able to converse with the loan officer or the person who's working with you through the loan, that is a good sign. And my opinion is that I have actually worked with mortgage brokers, I've worked with banks, and in certain banking facilities. And when I was looking at Revolution, I actually went through Bankrate. It was one of those days that I was just curious about what the rates were because I was listening to Bloomberg, I was listening to the news, and they were talking about just a little drop. And I said, you know what, it's a great time really now for me to pull the trigger. And when this gentleman, Jeff, called me from Revolution Mortgage, I was a little hesitant. I said, well, you have no application fee and all your costs looks really low. I asked him, I said, can you explain to me how you guys are making a profit? Gentleman was very direct and explained that they also resell loans as a wholesaler. So that's why they're able to offer me very good rates and along with my credit score. I was sold at that moment. It was very easy in terms of just going through the process, filling in the application online. He sent me a link, secure link with the information. And then I already had all my documents ready. The only thing they probably needed as a follow-up was just verification of my employment. And all in all, it was a very seamless process, always in touch. And that brings me to number 5. Along with disclosure and just being open to you about how they're making a profit, some mortgage brokers will not be. Number 5 is around communication. Before you get in the door and sign any documents, if people can't get back to you within 24 hours, they're probably not the right people to do business with. I understand that everyone's really busy, but here's a comment. If your business is to respond back to customers and inquire about rates, about closing costs, and that's your job, please, for God's sakes, get back to them on a timely basis. I have actually worked with mortgage brokers that probably won't get back to me for 2 days, and they'll say, oh, I missed your email, and here's the numbers. You know what? The rates fluctuate every day, so things will change. And if people can't respond back to you on a timely basis, move on and find yourself someone else. I do have one additional bonus tip for the viewers. The bonus tip is this. A lot of the lenders may share this with you, some may not, because it's a way of them to make additional profits. There is a section within your closing costs where it says items that you can shop for. These include title insurance, closing, and I'm gonna share this in the second video and break this down for you. Remember that, so you can actually go to other title companies and shop for the best rate possible. I hope that you found this intro a little useful as you go through the refinance process. If you guys have been following the news from yesterday, Jerome Powell did give a message that in about 6 months, in 2022, the Federal Reserve will be stopping their easy money policy and they will start tightening monetary policy. So that means interest rates will go up. And as you've seen, inflation is still there, so they have to eventually do something. So take this as an opportunity now, if you can, to get in towards the tail end while interest rates are still low and refinance your property. In the next video, I'm gonna cover what are some basic numbers of savings that you can look at, and I'll break down a closing sheet so that you know where are the areas that you can save some money and then use that money for a healthy investment and grow your financial future. And until the next time, guys and gals, happy hustling towards your dreams. Take care.